What's up guys, Max Armand here, your source for all things real estate, finance, and sports here in Los Angeles. And today's video is all about high interest credit card debt and how to get rid of it. It really is one of the worst things that you can have on your financial record. It prevents you from getting loans, the interest accumulates like crazy, and really until you get honest with yourself and confront it head on, you're not gonna be able to get yourself out from under this debt. So later in the video, I'll be telling you from experience how I was able to eliminate almost all of my debt. I ran up a lot in one calendar year in 2017. I had a wedding, a honeymoon, and bought a house, and over the last few years I've eliminated almost all of that debt that built up. So let's get started with the basics, pros and cons of credit card debt, because there are good things about it. Carrying credit cards and paying them off on time and carrying a low balance is gonna increase your credit score. Creditors are going to see that you have a long credit history, a couple of different accounts that you've been paying off on time, and so it's actually going to build your credit score the longer and the better history you have with credit cards, right? Second, it gives you flexibility. Like I told you back in 2017, I actually put a lot of my expenses on credit cards to save money for a down payment for a house. So those credit lines allowed me the flexibility to keep cash in the bank that I knew I was going to spend later on. Third, benefits, right? We all love getting miles. I have a Southwest card, I have a United card. I get free flights all over the country for my wife Talia and I. And so the benefits are a great way to sort of get, cash or benefits back for that money that you're putting on credit lines. But now we have to look at the cons, right? Because there are a lot of them if you're carrying too much high interest debt. First, it's really gonna hurt your credit score, okay? If you're carrying 30, 40, 50% or more of your total credit line filled with debt, that's really gonna lower your credit score. It's really gonna hurt your debt to income ratios when you're going to qualify for a mortgage, and you're gonna get worse interest rates moving on if you go to a creditor to open a new line of credit for a vehicle or another credit card, so to speak. Next, the big one is the interest. Compounding interest, revolving debt, high APRs, they are just gonna crush you financially. And if you're making only the minimum payments, it can seem impossible to get out from under this debt. We're gonna address this later on and give you strategies on how to overcome that. Finally, overspending. And this is a really big problem for people that are first opening credit cards. They think, hey, I have this $3,000 credit card, I only got $1,000 in the bank, let's go buy a new laptop, let's go load up on stuff that you might not need. Credit cards give you the illusion of being able to afford more than you can a lot of times. So don't get caught in this trap of overspending just because you have a high credit line. So if you're watching this and you kind of relate more to the red side of things than the blue side, then this video is for you. We're gonna move on now and talk about some proven strategies and principles that you're gonna need to follow that'll really allow you to tackle this debt and get out from under it. So let's move on. So the very first step that you must take is get organized. You need to know exactly how much you owe, what the interest rates are on each different credit line that you have, and exactly what your monthly payments are for each of your different cards, auto loans, mortgages, things of that nature. I'm gonna link down below to a debt spreadsheet that I use, and it's a really simple way to track every single credit line, every single auto loan, student loans, your mortgage, all in one place. So you know exactly how much you're paying each month, how much you owe, and I go on that sheet and I update it once every couple of weeks. I check all my banks and see exactly where I am, which accounts I'm paying down, and which ones I'm about to pay off. All right? So the next one, set budgets. So once you know exactly how much you owe on each credit line and what your minimum payments are each month, or your set payments that you're making above the minimum amount, you can set your budgets. Now, whether you bring home $5,000 or $50,000 a month, you should know exactly how much you're bringing home and how much is going out. And I always like to find just how much more I can be paying off comfortably. So minimum payments are only going to get you into trouble. You should be seeing exactly how much you can afford, whether it's $1,000 a month or $2,000 a month, to put towards your debt, and then actually structure it to be paying off the highest interest rates first. A lot more on that later in the video. And finally, make a plan. This is really what we're going to be getting into through the use of balance transfers and personal loans to restructure that debt and get you paying as little in interest as possible. But what you need to do is have a set strategy, a set plan before you make any of these decisions to ensure that you're doing it with the maximum efficiency and the way that's going to reduce this debt, reduce your monthly payments, and reduce your overall payments as much as possible. Now, in a perfect world, and I've seen other videos on this topic tell you to do this, it's simply make more money and spend less. Well, yeah, that's a great way to get out of debt, obviously. But for a lot of people on fixed incomes with fixed expenses, that's just not a reality. So this is where we have to use some strategies to restructure the debt and lower the interest rates. That's really going to help you over the long run, and it helps you make a plan to get out of debt over a set period of time. So the first thing that I really like are balance transfers. And this is when one credit card company will offer to take on debt that you have on another credit card from another bank and offer you usually like a 0% or 2% interest rate on that transfer for a set period of time, usually like 9 to 12 months. They do charge you a one-time fee, usually 3 to 5%, but it's a great way to take debt that may be getting charged 17 to 20% on one credit card and have it now be charged at 0% for 9 months or 12 months. That allows you to take the money that you were paying in that minimum payment and put it towards other higher interest debt. Second, personal loans. Now, these have really come up in the last few years. SoFi, LendingClub are a couple of the big banks that are offering these now, and they're loans anywhere from $5,000 up to $50,000 that you can use to pay off other higher interest debt. Now, these have some origination fees, and they are going to cost you somewhere in that like 7 to 11% APR range, but that's way better than a 17 to 23% APR that you may have on a credit card. Now, the last one, and I'm going to circle it and cross it out because you do not want this, is debt settlement. You may get letters in the mail or emails saying, you owe $40,000, we can get you out of this for $12,000. And this is actually a scam. What these guys tell you to do is actually stop paying your card, not contact your credit card company, and actually let that go into default. Then after that account has gone 3-4 months without payment, they call the bank and negotiate a settlement, and then the debt settlement company actually gives you a loan to pay them back for what they paid the credit card company. But what this does is it absolutely destroys your credit. It leaves you in a bad spot. A lot of times they may not even be able to settle that debt. A lot of times there's huge fees involved, and you may not even end up saving any money doing so. The one thing you can be assured of is it destroys your credit. So don't go for debt settlement. So moving on, let's go a little bit more in depth into balance transfers, and I'm going to use some actual numbers here to give you an idea of just how powerful this tool is. All right, guys, so now I'm going to walk you through a real world example of how a balance transfer can really save you quite a bit of money with very little effort. Okay, so we know that balance transfer is transferring one amount of debt from a credit card to another credit card at a very low interest rate for a set period of time. So here in this example, let's assume that you have $10,000 in credit card debt. You have $5,000 on credit card 1 at 17% APR and $5,000 on credit card 2 at 17% APR, just to keep things simple. And let's say with that $10,000 in debt, you can afford to pay right around 4% of that total debt. So we're going to say you can afford $400 in monthly payments, and you're paying off $200 on each card each month. Now, if you were to just pay those cards off, $200 a month, as stated, it would take you 32 months to pay that off at a total interest of $2,200. So you would pay $12,200 plus just to pay off that $10,000 at 17%. Now, let's see what we could do with a balance transfer. Let's say that credit card 2 emails you and says, hey, you can do a balance transfer at 0% for 12 months. We're just going to charge a 4% one-time fee. Okay, how that would work is you put in your account information, you get approved for the balance transfer, and you take the $5,000 from credit card 1, put it into credit card 2. Credit card 1 now has a $0 balance on it. That credit card is empty, okay? That's great. You eliminated a full balance off of a credit card. Now, credit card 2 is going to have 2 separate balances on it now. It's going to have $5,200 at 17%. Where'd that extra $200 come from? That's the 4% balance transfer fee from transferring the other $5,000, okay? So $5,200 is now being charged at 17%. Now, the second balance on there, CC2, and I put a B right there, is $5,000 at 0% interest for that 12 months. Great. You are not being charged anything on that money for 12 months. You can kind of set it aside, think about it a year from now, right? So how are we going to pay these off? Well, let's set a goal of trying to pay off that $5,200 a month balance that's getting charged at 17% in 1 year, just 1 year. At 12 months, you're talking $471 a month to get it paid off in a year. Now, can you not go out for drinks? Can you save that $71 and put it towards your credit card? That's gonna help you a lot, because the key is getting rid of this $5,200 balance before the other $5,000 that's a balance transfer gets interest starting to be charged on it month 13. So after 12 months at $471, that balance is paid off. That is great. Now we're starting to move to credit card 2, the balance transfer amount of $5,000. So to pay that off in 12 months, it's gonna be $454 a month. So your monthly payment's gonna go down by $17, and after 12 months, that debt is gone too. We were at $2,200 in interest there, and it would have taken 32 months for you to get out from under that debt. Using a balance transfer, you are now debt-free on this $10,000 after 24 months, and you've cut the interest that you've paid in half. So it's really powerful. You're pretty much getting this money at 4% over the year. So this is a real world example of how by a few clicks on a computer, going over this over the course of a week with your bank and getting approved for it can save you $1,100 just like that. Next, let's move on to personal loans. Let's say you've got more debt, more than 10,000, maybe 20 or 30, and how to combine balance transfers with the personal loan to get rid of even larger sums of debt. Let's get started. Before we move on to the last part of this video, don't forget to take a second and subscribe to this channel, hit the bell for notifications. You can also find me on Instagram at MaxArmand, my Facebook business page, or even take a look at my Zillow account showing my 350 plus real estate sales over the last few years. I appreciate all of your guys' support. Hope that you catch me on all the future videos, but without further ado, let's get on to personal loans. So now we're gonna get into personal loans, also known as installment loans from lenders like LendingClub or SoFi. And these are a great way to get a big chunk of money to use to pay off your high interest credit card debt. And these are really gonna help your credit score, because installment loans are fixed payments. They're not revolving credit card debt that lowers your credit score. So if you use this money to directly pay off credit card debt, it'll do great things for you. Now, I'm using a real world example. These are real numbers from when I took out a $20,000 LendingClub loan in May of 2018. So let's get to the numbers. Now, I was going to use $20,000 in credit card debt, but I used $19,100. I'll explain that to you in a minute. So if you had $19,100 in credit card debt at 17%, and your plan was to pay that off in 36 months, you'd be paying $670 a month. The total cost of that money, $24,107. You're paying over $5,000 in interest on that $19,100. So you want to get rid of that. You want a lower interest rate. You want to get the revolving debt off of your books. Take a $20,000 loan from LendingClub like I did at 7.46%. Now, I was charged a 4.5% origination fee. 4.5% of $20,000 is $900. So when I actually got this loan, I received $19,100, which is why I put that there. So I got this $20,000 loan, was given $19,100, paid off the credit card debt there. Credit card debt goes to zero. Now, for that $20,000 loan they have to pay off now, paying $621 a month for 36 months. The total cost of that loan is $22,383. You add the $900 origination fee there. The total finance and interest charges for this loan is $3,283. So if I would have just paid off that credit card at $670 a month at 17% interest, paid $5,000, I actually saved $1,724 by taking out this loan and paying off that credit card and getting it into a fixed payment installment loan. Now, another big thing, credit score goes way up, because over the course of these 3 years, I've eliminated revolving debt. I've consolidated into an installment loan, and I've not only saved money, but I've increased my credit score. So these personal loans, these installment loans, are another great way to pay off bigger chunks of debt. And when used in conjunction with balance transfers for smaller amounts at 0% interest, these are really, really effective tools to getting yourself out of debt. But it all starts with being organized and having a plan. You're never gonna get out of debt if you don't set a budget, make a plan, and execute on that to pay these debts off. But I thank you all so much for watching. If you like this content and want to see a lot more just like it coming your way, don't forget to hit subscribe, hit the bell to get notifications. I've got a lot on real estate, finance, sports, and more. So thanks for watching, and I'll see you at the next video.